Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 23rd. Today, we got continuing jobless claims on March. Came higher, a little bit higher than expected. That's good. More people claiming jobless on a continuing manner, and initial jobless claims came a little bit lower than expected. This is a big one because this usually means that less people is starting to claim jobless, and well, at least this one is a little bit better. And building permits came higher than expected, the same as new home sales that came a little bit lower, but still month over month 1.1%. Home sector is still hot, but nothing of this is big compared to what we saw yesterday's on the big FOMC interest rate decision, that we basically put this kind of rejection. Remember the daily, we were looking at this daily level at 13,000 and we rejected. We came even lower than this pivot at 12,900. And right now, look at today. I was really surprised when during overnight, we were, let's put the 5-minute chart, we were this bullish. We were honestly super bullish during the overnight, and starting into the open, we got a little bit of consolidation above, and this is really important, above this blue dot line that is last week high. We opened just there, right there. We broke the pivot, and look at this. This is an unbelievable move that is fueled since the open. This is fueled 1% by the fact that yesterday, Federal Reserve Jerome Powell said that, well, they are seeing signs of inflation going down, but more than that, they are starting to see the terminal rate near. So they are preparing the start of pausing, pivoting, because we are already seeing signs of weakness on the economy. The bank issues that we had last week are still there and are showing signs that something is broken. And right now, Fed thinks that instead of raising more interest rates, instead of doing more hikes, they are waiting for the banks to feel the pain, to feel the pressure, and start cutting loans, cutting debt, and putting pressure that hiking interest rates would have put instead. So Fed are seeing the banks under pressure. They are still saying that the bank sector is strong and has now liquidity, now that the Federal Reserve and the Treasuries put a lot, trillions, billions of dollars into the market to support the banks. Well, Federal Reserve shared the message that this kind of weakness on the banks will provide more pressure on the economy, so they don't need to hike further. Yet, they are still saying that probably another one more hike before staying there at the terminal rate for months. And one of the tricky things that Jerome Powell said is that basically he said, we are not talking about cutting rates this year. And I think that's what caused the markets to start feeling the pressure and start going down heavily. Then today looks like, sometimes this happens. You see a big rejection and then people buy up this. I'm not still convinced. This to me is just a pump. It's just a trick, a manipulation, because for me, there's no way Nasdaq stocks stay at these levels for long enough. Interest rates are going to continue being higher, and these stocks are being bought up like crazy. Look at Apple. Apple is super strong today, 2.70% in the green. Microsoft, 3% in the green. Tesla, 3.55% in the green. Amazon, 2.30. Looks like everyone just forgot about everything and just are buying all these tech stocks because they think inflation is not there, and they think these values are good. I don't think these values are good. Apple is hovering around 29 times its value. Microsoft the same. I mean, Nasdaq is feeling a lot of FOMO, and I think that's greed. On the technical side, I'm seeing a lot of red on the tape when we move higher. And I think big banks, hedges, and big funds are just dumping shares into this push. And the only ones that are buying up here are people feeling FOMO and feeling greed. I think this is not healthy. I'm not bearish. I'm just saying that after this rejection, the logical move after the Fed's message is just to correct a little bit. But instead of that, we are just putting a brutal move of 2%, 2.40%. So I don't think this is healthy. And more than that, this is not the proper way of being and feeling after what happened yesterday. Maybe I'm missing something. I think a lot of you guys will also share my point of view. I think this is just an unbelievable pump. And please be careful up here because Nvidia, Meta, everything that you see is just unbelievably pumped. So be careful because when things go really, really high, they can also dump in a blink of an eye. So be careful. Everything is green. I don't have any technical because right now, after yesterday's FOMC interest rate decisions, there's nothing technical to talk about. It's just fundamental. And on a fundamental side of things, I don't think, let me open the probabilities. I don't think this is good enough. If you check the probabilities for the next interest rate hike, it's 50-50 for flat or 25, another 25. So it's still there. They said, Federal Reserve said that they are going to raise at least one more time interest rates. And still markets are going ahead of themselves, saying that they are going flat. Probabilities are also showing for December a 35% of probabilities of going lower at 4% this year. So all these are cuts. And again, Federal Reserve said that they are not thinking, they are not talking, not discussing about cutting rates this year. So why are the markets putting this overall sentiment of FOMO, bullishness, and greed? I don't get it. I just don't get it. And when you usually feel like this and you see these kind of moves, remember, everyone is jumping on board of this. And this is the perfect setup, the perfect trap for Wall Street to dump everything and start taking short positions. Because in the midterm, markets are going to pull back. This is for sure. Markets are going to pull back. Do you want to be the guy that instead of buying down here a pullback on a proper value, starts jumping on this level that got rejected yesterday this way with this big topping tail, or at this level in which we have been rejected since almost 2 months? Be careful. This move is insanely powerful, but at the same time, we are just building momentum on FOMO and I don't think this is a proper setup to be safe and to manage your risk. That's my recommendation. That's my advice. Everyone can do whatever, but right now I'm not feeling this. So I'm not taking any positions long. I was hoping maybe some shorts may happen, but after this is for me better for a short right now instead of long. I'm not going to bet against that. I'm not going to put myself in front of this train, but just understand what I'm saying. This is too green. And when this is too green, something is not working. Something is really not fitting here. So dollar is in the red. It's trying to hold these levels. Maybe this is the cause. But again, markets are pricing in. This is December interest rates. Markets are pricing in 4.20, not the 4% that probabilities and analysts are pricing in, nor what Federal Reserve said yesterday regarding that they are not planning to cut any rates this year. So be careful, because we are missing something. And when you have this feeling that something is not fitting, is not working, or something is weird, just be safe, stay cash, sit tight, and be patient. And that's all from my side. That's the kind of things that I would like to share with you when I'm not taking any position, because I understand that this is not really logical. Markets are irrational for sure, but 1, 2, 3, 4, 5 30-minute candles in a row is just insane. So be careful, prepare for a pullback, or wait for better setups. Please don't be the guy that buys here and then gets a pullback of maybe 88 points or 0.68% to the mean. That's only to the mean. So that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. Thank you for your time as always, but remember that the trading day is not over yet. We are insanely high, but there's a lot of hours ahead of us until market close. Remember that discipline and risk management are key for your success. Be patient and stay safe, everyone.